Hi everyone. Let's review the markets again real quick because this has been some punishing action. The ECB came out with a good number. if uh, if you're a bull on assets and debt instruments, they uh, they came out with a very big number, 1.1 trillion. Um, I suspected they might do something like that. The market loved it. Kind of hung on for a minute to wait to see what everyone was going to do and then lift it off. This is a pretty good looking hammer here. We're still not out of trouble. This is still a sideways market. We got pretty nasty resistance here at 103.65, which I think is our next target. This is the Qs, daily of the Qs. And then after that, we got a gap. We have a gap on the S&P, and I think we might have a small one here on the Qs, up at 104 and change. This is still a bull trend. For days now, I've been screaming, don't short, sell some puts or spread, but do not look for a big flush, and we are not getting a big flush. The market is coming up to overhead resistance. MACD's about to cross. The Stoch is crossed. This is just nothing to sell. I wouldn't be surprised if we did sell back down a little bit and try to flush out the late coming bulls. That would be typical. The lagging span here on the Ichimoku cloud is above previous price action, and we have broken above the cloud. That is bullish. If you use this indicator, that is bullish. Other indicators are likewise coming along, but they're being dragged a little bit here. You see the MACD is not completely onto a buy signal yet, still negative, but it looks okay. Depending on where we finish this week, tomorrow is a big day. That will make a big impact on the charts. The MACD is still declining, but it's also still positive. It's also still on a buy on a weekly. The Stoch is headed down, which I do not like on the S&P weekly, but that does not have to kill the market. This has head down before, and the market has gone sideways or even up. So it's tough to use this as a sign to run. We are working on a weekly engulfing candle here. Close in a little bit so you can see it better. We held the 20-week, and we are looking to close above the body of the previous week's candle. That it would be a very bullish sign, but I'm cautious here. I'm not going long. In my trading account, I'm expecting an inside week next week, followed by another outside week. And both bulls and bears will get squeezed. The daily Stoch is going up, while the weekly Stoch is going down. So we do not have a nice smooth trend in either direction. Okay? Bear that in mind. If you want to buy the dips, we get as low as 2005 here, but it was inside the last week's price action, and we found buyers. You can go ahead and do that. But stay light and don't expect monstrous upside. This is a very small week. We went from 2004 to 2050. This is only, a couple of percent up and down. Eventually, we will get a stronger direction. It's probably going to be up because we are in a bull trend. So do not get overly excited, but if you want to, you got to stay bullish if you want to pick a direction. I think this Stoch is going to wear off next couple of weeks and turn higher again. And that's going to wear off this little downtrend that we have been stomaching. We have the vote in Greece coming up on Sunday. We'll have no positions over the weekend unless you want to see your stops blown out on Monday. That could affect the market, or the market could choose to ignore it. But it's going to be a little hair-raising. Once that's through, there should be some clear sailing ahead for a little while. The VIX is getting crushed. I had a suspicion this would happen after this bearish engulfing candle essentially right here got followed up on. This could reverse on the Greece vote, but I just don't know for how long. Biotech looks good. Huge buy tail here still. ACT, I think my favorite biotech is actually up today, but we won't look at that. The McClellan oscillator, again in no man's land, but it's moving higher. And again, a lot of the overbought indicators bled down, but not fast enough to make the bears any real money. The bears just couldn't break us down as hard as they tried. In fact, the best news for the bears and the worst news for the bulls is that we really didn't have much of a correction here. This is a chance for a real correction down to the 50-week moving average or the 200-day moving average, and we didn't get there. The low was made overnight. I believe it was 1960, right around there. And again, I've seen that happen before in the past, and that's why I didn't short, even though there was every reason to short. The low's made overnight. Unless you're trading E-minis cash with a trailing stop, you'll never get out. If you're a bear, when you wake up in the morning, you're trapped. They've ramped it pre-market, and by the time you wake up, the market's, you're 20 points underwater on your short. 15 points if you're lucky. And you have little choice but to cover. Because the market squeezes higher all day. The days are for buying, the nights are for selling. Europe does poorly. Asia does poorly, and we suffer that overnight. And then the days, we get reliquefied via various, money markets or whatnot. The cash comes over to the States to buy up S&P, to buy E-minis, to scalp, to day trade, whatever. We're at 2050. We're at the declining 50-day moving average. You can see on the S&P, we've actually regained it. I believe on SPY, okay, now we've just barely regained it on SPY as well, though it's flat on SPY, whereas the S&P, it looks better. It's the yellow line here. Let's get rid of the cloud for you. This is not a short. It's just not, although I wouldn't be surprised to see us hold this on Friday and gap down next week and then do some more work and try to fill the gap. It's flat. It's actually gone back to rising, I believe. 2045 and change, 2046 and change today. So technically it's rising. That's a big, big victory for the bulls. A big victory for the bulls. Don't expect this to fail anytime soon. The bulls have the baton and they're running with it. They like to hold the 50-day and move higher. We could continue to move higher and fill this gap up to 2090 and make new all-time highs. That said, there may very well still be some dips along the way. This is not going to be a smooth trend. Not selling any out-of-the-money call options. I'm focusing on selling the put side, but I'm staying under 1990, and if I can help it under 1980. Those are still potential targets. But follow price and keep a tight stop and just trade light. We're going to see some more dips. The lows made overnight are never the ultimate lows. The ultimate lows are always made during the day. But how long does it take us to get back there? Weeks, months, who knows? We're coming in. We're still in the bullish season, January to March. This is still bull season. If you believe in seasonality, and you have to respect it, even if you don't believe in it. And looking at the weekly, closing over last week's high would be extremely, extremely constructive. I'd like to see the Stoch turn up. I'd like to see the MACD flatten and turn up again. But we are still holding support. Looking at the 20-week, we're holding it perfectly. We really, really risked losing it here. My charts do not want to cooperate with me. There it is. We really risked losing it, but we held it, and now we're pushing higher. And the shorts are getting squeezed again. I thought the ECB would disappoint, but I also knew there was a chance they would hit us with everything they had. They're very scared. Europe's in horrible shape. The Greeks are probably going to default or make some type of move to remove themselves from the ECB. With that risk being as bad as it is, it probably wasn't very hard to convince the Germans to allow for quite a big printing scheme, and they got it. No one wants to see everything fall apart. So I expect this to continue to rise. We might give back half this candle. We still might take a run at 1980, although that's getting less and less possible, given how the charts are looking now. The bears have had 1, 2, 3 chances to break us down. Couldn't do it. Probably have another chance next week, given the Greece news. And then that's it. We continue to build this sideways wedge. And as it stands now, we are setting up to break up from it. Okay, doesn't mean it can't continue a little while longer. You can see a little bit better on the daily. Let's look at see if I can just do a 2-day and smooth it out a little bit here. There we are. So you can see this is 2 days worth of really strong action, really strong buying. I don't expect that to just vanish. We can come down again. We can flush down out of the wedge, but you're in a bull trend. So it doesn't make a whole lot of sense to try to short this. We're going to go sideways and in all likelihood move higher again. This could take a while. We have some pretty good overhead resistance, especially in the 2060s. So this little ramp could be done, and we could push down, find some buyers, and move sideways, and eventually break out of this. I would expect the market to make a high sometime in March, possibly April. I think by May, the high for the year is going to be in. So I am bullish the next 3 months, although you are going to see continue to see some nasty dips, and you will see them get bought up, I believe, although I'm just respecting price at this time. And eventually we will break down for real, seriously. This is not looking as bullish as it once was. Big rally, gave about half of it back, rallied off that, gave it all back. When you're giving all of a rally back, that's a topping sign. That's a near term, intermediate term danger sign. Doing more work, letting economic numbers heal, if you will, or digesting how bad they are. We are still in a very liquid environment. That's why the bad news is not crushing us. Europe just reliquefied, essentially. Okay, they just said they're going to remain extremely easy in their monetary policy, basically have negative interest rates, and negative interest rates the world over is right now the global policy. So until you get a nasty recession, the market's going to have a bid under it, because negative interest rates mean all assets must go up in value. And that's just a sweet, sweet pill for the politicians. It solves everyone's problems. They'd rather deal with inflation and make excuses for inflation than not reliquefy. So we've liquefied again. I'd expect this to continue, maybe sideways. Don't get too bullish here. Pop out of the wedge, and by March, be at 21 or 22, even 2250 is possible by March. No one is that bullish. I'd be surprised if we get as far as 2300. 2300 is possible. 2500 is possible, although that's really looking too high at this point. 2250 was my previous target, and I wouldn't be surprised if we only made it as far as 2150 before we start running into some real problems again. Volatility should come down. Everyone's going to get ultra bullish, declare bears dead forever, and you're going to see volatility come back again. We had a 1, 2. This could be the third push up to 2150 or 2200 that fails. If it does fail, expect more sideways action until summertime. I'm expecting the bears to die very slow this year. Everyone has lagged the market. A lot of money managers have lagged the market, and we are most likely going to hang on until all the bears have given up. That's the way this works. That's the way this has always worked. Back in 2007, everyone knew the market was overpriced. Everyone knew that the risks out there to the long side were enormous and would eventually trigger. And they were right. Everyone was right. So what was the problem? Well, when everyone's right, or when everyone's on the same side of the boat, you either get the opposite, or you get what I believe always happens is something like the opposite, and we mostly move higher, and they drag it out. Okay, so if you're bearish, don't be surprised if they drag this out all year collecting your premium, all year squeezing your short positions, which have every reason to work out, until the very end, until what's going to seem like forever. It's going to seem like years to you, when in fact it's only going to be a few months. Around July, August, September, the market starts to get, right after the 4th of July, I think you're going to start to see some real trouble for the markets when people come back in August, if we have inflation, especially during that time, or if we have increasing deflation. This is another divergence. It's not a good sign. We can go sideways to down and then turn higher here, and we're still making lower lows in the MACD. Now, we've been doing this for a long time, and the bears have been getting mocked for pointing this out. But divergences this bad typically do play out. Okay, they typically do play out. And just when they do, no one knows. But when they do, the bears are going to have the last laugh this year, I feel. Then the Fed will probably step in with another massive emergency program. They will not, I believe the next Fed program will not detail how much they're buying because they don't want to freak people out. They don't want to start a panic and rush everyone into gold. They're simply going to say we're targeting 2% inflation and we will purchase whatever assets we have to across the globe, and especially in U.S. domestic markets, to make sure that happens. Okay? On a monthly chart, we got some really funny looking monthly candles. These are red. We were actually red last month, opened at 2065, last was 2058. Next month, opened at 2058, so far we're at 2054. Again, I talked about this in my last video. We can go sideways on a monthly. We can have a couple of red months and still continue. 2 red months right here, red followed by barely green. MACD continues to roll over here, not a good sign. I believe the RSI is also rolling over a bit. 1, 2, 3 candles. Market went nowhere. Nowhere. 1408, 1408, 1420. Okay? What are we getting here? Same thing. High was 2075. High was 2093. High was 2072. This is bullish. We're consolidating. This is generally monthly consolidation. So next month, or the month after especially, I expect us to move up because we are consolidating the highs. What matters is the close. The monthly close is what matters. This was terrifying, but the monthly close is what matters. We generally don't have 4 sideways months. This is our 3rd. Okay, so I would not expect next month to finish around this mark. I would expect us to move up from here, and you can see that here. 1, 2, 3, month 4, we started there and moved up. 1, 2, 3, here, 1, 2, 3, almost same type of thing. 1, 2, 3, next month we moved up, and we're going sideways again. So we're not quite done. I will put Bollinger Bands on this. There we go. Just to give you a rough idea, top of the Bollinger Band is right where I had my trend line, 2150. 2150 is still a good target on the S&P to the long side. I am staying long in some other accounts, and I am looking for another push up. Okay, this video is taking a long time. I'm going to run across some other markets real quick. As good as the S&P is doing, no one holds a candle to gold. Gold is bulletproof. It finds a bid at every... Okay, it tried to dip today, and it couldn't do it. They bought it up. Bought it up yesterday. Gold is stretched, and a lot of people just don't want to get burned chasing it. If gold comes in at all, and it very well may, just to calm down, it is a raging buy. You got support here. You have support here. So far, we haven't even tested this support. We haven't even tested 1275. I'd like to see gold at least move sideways to let the moving averages catch up with it, because it's really just running away with itself. And that type of runaway tends to result in a big give back at some point, even if it's just half of one of these monster candles. If we come back here, you see gold has been pretty wild for the last little bit. This is real gold, not paper gold. This is XAU. We had a tremendous run up here, and then boom, gave some back. This was bearish 2013, but you can see what I mean. We had a monster run up here, you can't lose. Now's the time. And what happened? We gave it all back. So people are afraid of gold. Even in the run up over here, this is a huge candle on a daily, and we gave it back, half of it back 4 days later. This was the end of 2000. This is in 2011. Huge bullish trend, and then we completely, obviously, fell out of bed. Here, is that 2012? Excuse me. It says my chart is jumping a whole year. That's nice. Let's go to the weekly. There we go. So you're going to have a couple of weekly, big weekly candles followed by down weeks. I think you could very well see some steep price action to the upside this year. Sorry, I don't have a better chart. My stock program, my freestockcharts.com doesn't want to show us a whole lot of accurate gold going back too far. But this is on a 2-day, it's getting a little shooting starish. On a weekly, it looks very strong on a weekly, very strong. This is a raging buy. We had a breakout week, breakout to resistance, smashed all resistance, and then followed that up. That's extremely bullish. You tend not to give back anything more than the base of this candle or half of this one. So you could see the 1260s, 1250s. 1250 is not out of the question. We are coming into resistance on the weekly cloud, which does sometimes act as resistance, and this does need time to turn up higher. So be patient with gold, but if you wake up and gold is down 50 handles or whatever, if gold trends down over the next couple of weeks into the mid 1250s, and everyone's telling you the action is in stocks because stocks have caught a bid and gold is for suckers, they are the suckers. Okay, gold action this year is far more bullish than stock action. Stock action looks sideways at best. Doesn't mean we can't run up into March. But after March, I think you're going to see stocks really struggle, and you're going to see gold grab the baton and really run with it. I would not be surprised to see $1,600, $1,700, $1,800 gold this year. I think you'll easily see $1,500 gold, maybe by the middle of the year. At this rate, this is a 30% move, kids. Okay, we were down. We touched 1,050. Now we're at 1,300. That's nearly a 30% move. That is a nearly 30% move. Stocks were up 30% all year last year. Okay? So bear that in mind. You want to see gold come in a little bit. As long as you go out far enough in call options on GLD, or you can buy the futures themselves if you wish, it's going to be really hard to lose. This is a weekly. The MACD is crossed on a weekly big time. In fact, I believe it's even crossed on a monthly. There isn't a monthly. But if we look at GLD and add the MACD, I believe this is going to give us a MACD on a monthly. Not that the MACD is the best indicator in the world, but crossing on a monthly is a sign of strength. And look at that candle. That is a monster Japanese Maribosi candle. We've broken above all possible resistance. We filled this gap, and we're going to look towards the next gap, which is essentially this level, 128 and change, and then above that, even higher. We really need to take a run at this level up here, 153. This is the type of candle that is the start of a great run. MACD's crossing on a monthly. We're going to give back some of this, I guess, on a monthly level. It would make sense that we do. We don't have to. We can start next month right here and move up 8 handles. Then move sideways a little bit and move up 15 handles. Okay? So if you have the option of buying gold in your retirement account, I suggest you do so. This resistance area at 117 on a monthly, we have completely smashed through. We have overtaken the next level of resistance, and we are heading towards 134. I don't know when we get to 134. Next month could be a bit of a shooting star type. I think it's going to come in, come up, and kind of settle at the highs. That's usually what happens in a monthly after something like this. If you want to go back and just look at previous monthly big hammers like this, there's one. We came in. There's another one that was the start of a bear trend, but you had a MACD cross a little later on there. Moving higher, we don't have much. This one was pretty bullish. These three look great. We don't have a candle, except for at the top and right before the top, really that big. At a downtrend, at a base, 1, 2, 3, price went nowhere. Price went nowhere for 3 months. That will qualify as a base. Month 4, boom. That is a huge candle. I cannot emphasize that enough. Huge. Next month we could do 125 to 133 easily. And now I expect some consolidation and another major push higher into mid-year. Okay, by July we can be at 1500. So this is going to be a hot place to be this year. Don't let anyone tell you different. MACD is crossing higher here. If we want to look at the RSI real quick, so I'm running out of time. We have regained 50 on a monthly RSI. Lowest we ever got was 30. We had a little divergence here. RSI corrected up to 40. That should have caught your attention on a monthly chart. When we were flushing and everyone was bearish and the RSI moves higher, that's not a bear sign. And again, we followed through this month. I would expect 50 to hold. I would even expect us to move up to 70. So any dip next month in gold, buy it with both hands. Silver real quick. Pretty much the same thing, although I think silver is going to have a little bit more resistance. Up 1.5% today, of course, because after all, it is a day. Look at this buying volume on the daily. Huge buy, huge buy, huge buy. All these green candles are major volume. There has been a truckload of buying in this name. Huge buying volume here, broke out on that volume. Same thing with gold, consolidated the breakout. Silver should have a little trouble around 18. Also, a good time to look for gold to pull back a little bit. Not much. No one wants to sell this type of move. They're looking for a pullback. We come in. We will probably hold 17 and then move higher from there. Silver has tremendous upside. Tremendous upside. Let's go check out the monthly. This is paper silver, by the way. And likewise, the MACD is getting ready to cross over. Let's add the RSI real quick. There are multiple indicators. I only cover some of the major ones. Again, RSI crossed. Not quite as strong as gold. Hasn't regained 50. And on a daily, if you just want to look at the cloud real quick, which is a good trading indicator, we have regained it. The RSI is soaring. The cloud has turned higher. It's gone a little sideways, so we really need to come in here a little bit. I'd like to see us come down to conversion, which could be 17 by the time we get to it. And then I think it's going to be smooth sailing. I think you're going to see $30 on silver this year, maybe more. And silver is probably going to return to its bull trend. If you just want to look at a monthly, this is the same deal as gold. Take off the cloud so you can see it a little bit better. We came down. We had a steep downtrend. We totally broke it. There was a breakout, big breakdown. Then it turns out JP Morgan was manipulating the silver market, and boom, off we went. So this was a major breakout level. I expected us to hold higher. I expected us to hold this one. And we've broken below it big time. And now we are going to recapture it. If we continue higher, and I expect we will recapture that level. That will trigger a lot of buy orders. Okay, silver broke out, gave a ton of it back, but it has held. We went from 8 to 50. This is paper silver, so this is really amplified. And we came back to 16. So we came back to just double what we launched off from, and now I expect we'll continue higher. This is not as bullish as gold, but it still looks fine. So we check the time. Okay, so that's it. Wait wait a week at least if you want, at least a weekend, and then reassess the market at that time. Don't get ultra bullish yet.